Hi everyone, so welcome to Investing for Value. So if you own Tesla, you're ecstatic right now because they have done really well, or even that's an understatement. They've done phenomenal. Like the share price increase of $129 today, and to think that this stock price went as low as $178 last year. So when you consider that, how fortunes change and how everyone changes their tune, like the media was against them and now the media is all for them. So all of a sudden the momentum is in this stock, and after last week's quarterly, when basically all signs were positive to show this is a company for the future. This is a company that's got a massive amount of demand for the current cars they produce. They've got Model Y that's in production and coming out this year. And then they have the Tesla Semi, those massive trucks that they were starting to make in limited production this year, but they're going to make more of it next year because making those trucks is quite costly in terms of the batteries. Like they just take so much batteries that Tesla hasn't brought enough technology to reach that level yet. Though Elon Musk kind of hints at that they kind of have increased their battery tech, so it should lower the cost of batteries, and those Tesla semis should start rolling off, the conveyor belt, and you should see a lot more in the future. And then you've got that cyber truck, which is, like a lot of people are very excited about that and kind of anticipating that that will do really well itself. So there's like quite a lot of products coming in the next couple of years. And never mind just trying to meet demand, that this company trying to meet demand is going to be a stretch for them because demand is through the roof compared to what they can supply. So this is a company that is definitely going to be doing really well going forward. Also, they've got other businesses. So that Elon Musk has talked about how basically they're going to start selling insurance, and a lot of people who can buy the insurance are actually really happy because the insurance is cheaper. They understand the driver better. So why, if you own a Tesla, why wouldn't you want to just buy the insurance directly with Tesla? Because they also understand your car, they can fix it in a better way than most insurance companies can. So cheaper, better, more efficient. I don't see why someone wouldn't want to sign up with them. Then we look at their solar power kind of business, and that itself, they expect it to increase by 50%, which, I can only see that getting bigger and bigger, particularly if people buy more Tesla cars. This is a company that is building its own ecosystem. So, one company that we look at is Apple. Apple has its own ecosystem. Um, Whereas, if you have one Apple device, you kind of want to get all of them. And the same thing with Tesla. The minute you have one device, one like a car, you might be interested in the power, the solar panels, and then it just all combines into like a really efficient kind of, like you can survive off the grid type of scenario, though it's not cheap. So that's the thing, but people are willing to save up for it because we're going into an age where a lot of people understand this technology, they want to use this technology, and they're willing to pay up for it, unlike other technologies. So that's going really well for Tesla. So there's nothing that's coming in to say anything's bad currently. So the thing is, like when everything's going really well, you have to invert that and go, okay, so what if something problematic does come up? Does all of a sudden does this company start showing cracks? Does the share price get hit a little bit? Because mind you, like a lot of people are holding on to a lot of profits. So the minute the minute this train stops, there's a lot of people gonna try to get out at once. So you got to consider from that aspect. Are you a long-term holder? Can you ride those waves? Should you take a little bit of profit given that markets could get volatile? Which is kind of like those considerations you're going to make for yourself. For me, I'm holding some Tesla stock, so very happy about today. For me, I'm considering reducing my position in Tesla, see how it goes. But for me, like as Tesla gets higher, to just get that little bit more reward becomes more riskier by holding each time, unless you're really long term. Like I love the company. I've been following it for many years. But for me, the minute the return starts to get lower, like I'm putting on I value Tesla on, like certain metric. Like for me, I'd say 150 billion is probably the upper limit for me, and it's already at 140 billion. I could see it going to 200 billion in terms of market value, which would be one third on top of what I think it's going to be worth. But apart from that, like I wouldn't be able to justify the numbers in terms of revenue, in terms of profits. So that is the consideration. So markets are willing to pay premiums ahead of it. So if Tesla earns, say, $1 billion this year, then at a market value currently at $140 billion, like it probably meets on a fair value basis because everyone's kind of going, okay, you earn $1 billion this year, but maybe you'll earn 3 billion next year, and then if we say like Tesla earns 3 billion next year, where does that put them at? Like on say like if they do reach 200 billion by that time, then like it's not too bad because they're a growth company, so people will pay a premium for growth companies, and they don't demand such a they're willing to give it a high PE ratio. But by that sense, we could see this company trading at 300 billion, which would be quite high. Like but it is still realistic, given how things are. Though for me, I don't like to try to push the boundary that much in terms of that bull case. But again, if Tesla just offers, if the Tesla said tomorrow we're going to offer ride sharing with Teslas, that opens another revenue stream. Firstly, you've got current drivers of Teslas that would possibly drive people around, though I doubt half of them will because most of them don't need the income. Like most people who can buy a Tesla these days, probably, like half of them don't need it. The other half might consider it. But then you've got another avenue of people who might want to buy a Tesla because all of a sudden there's a ride sharing app that they can start driving people around on their Tesla with the view that in the future that they can actually just have it on autonomous driving, and this car is just going to be earning money for them without them having to do anything else. So that's kind of a thing as well, that all of a sudden Tesla can just open an extra revenue stream for themselves. So in terms of, can this company herd to 300 billion, which would be double, well, just a little bit over double of what the current pricing is, would be looking at close to $2,000. So it's pretty realistic, like assuming the bull market continues very strongly. If not, then I'd say things would probably calm down a little bit. There'll be a bit of profit taking, but currently I do feel like there's a lot of momentum. Like every person is wanting to buy in, and every person is recommending their friend to buy in, and their friend is recommending their friend to buy in. So there's a big amount of people lining up to buy this stock. Every time it goes up a level, it's reducing. So the amount of people wanting to buy will diminish, and the amount of people wanting to sell will start to increase as the price gets higher. But everyone's kind of just so ecstatic. They don't want this feeling to end. Like euphoria is great, but the next part of euphoria is this big, drop. Like you if you hold for the right reasons. You hold because you believe in this company long term. You hold because you reckon, like if there's fluctuations in this price, you don't mind. If you can't hold, if there's fluctuations and you don't think you can stand it, you can't hold your emotions, I would actually take a little bit of profit. It never hurts to hold a little bit of cash on the side, just in case if you want to buy a little bit more in the future. Like say if Tesla just came back down to $500, you'd be saying, oh, I wish I had some cash to buy some. So you got to put yourself in those scenarios that, like, if this stock keeps going up, then great, but nothing goes up forever. And it's had a really good run, so you have to consider what you want to do with this Tesla stock, especially if you're on a good amount of profit, which most people should be on a pretty good profit right now. So let me know what your thoughts are in terms of how how you're feeling about Tesla. If you don't own Tesla, like why don't you own it? Because it's too pricey, or you don't believe in the company. And if you do own it, what's keeping you in the stock? So those are like questions that you want to ponder. For me, I like the company, but I think pricing wise, it might be getting a bit higher. And there's certainly other companies that I do want to invest in as well, that I do like a bit more than, like, in terms of return. I think some of them might have a better return, though it's worth seeing how things pan out. Though like Tesla currently, you everyone's just piling in, just that they like it's everyone's buying the future. That's basically it. Everyone's looking at the stock and going, where can it head in the future? So the price is going to possibly hit a bit higher, though the higher it gets, the riskier it gets, and then you just have to consider if this is stock that you want to hold, or like if you don't always have to sell all of it. So that's one thing you have to consider, that you don't have to sell everything. You can just sell a little bit, and then that's fine. Just manage your risk. Until then, well, good luck investing.